JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 15th of July 2020, so yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now jumping into this little picture, which kind of I pick up on every morning. So yep, as you can see, the figure unfortunately continues to rise. Yesterday we had another surge in the cases and total infections. However, it wasn't as it didn't hit the record. Nevertheless, it was at a high, substantial high. But of course, initially the market kind of the market was seen moving lower. However, it was quickly kind of it reversed quickly back to the upside. But again, coming back to these figures here, you can see that yes, unfortunately, the figures are rising. The total amount of deaths here, now this is where it's interesting. The total amount of deaths, Brazil overcame United Kingdom, and I mean that had happened a while ago already, a few days ago, but nevertheless something that's quite interesting, that so now basically the way everything's shaping up here, on especially on the table here of total infections, is that US, Brazil and India are leading the way, the top three. And yep, in terms of total deaths, it's US, Brazil and United Kingdom still. So UK is not really let's say doing well in that field. However, hopefully they will get back on track soon. So but again, like I said, hopefully the whole world gets back on track, and we can all kind of leave all this behind us. Now jumping into the charts, now this is where I was talking about that Nikkei, for example, today closed nicely in the positive territory. Yesterday, as we saw with the indices, the U.S. indices, those have declined sharply during the opening bell, or should I say after the opening bell. However, by the end of the day, before the closing bell, they've managed to recover all and kind of closed in the positive territory. So basically we are getting closer to the earning, well, we are right now in the earning season. So yep, we're keeping an eye on that one. Probably the market participants are considering that there is a good chance that a lot of companies that will come out with much better results. So yep, which much better earnings this time. So of course we'll keep an eye on that. But looking at this technical picture of Nikkei, for example, you can see that yes, Nikkei managed to climb back above this barrier, above the 22,785 territory. And yep, and basically what I was talking about this week was that if we get a push above that above this level, then yes, we will aim for some higher areas. And our next target will be the highest point of June near the 23,186 zone. So as you can see, it made a good move towards that in that direction, but kind of didn't really reach this level. We're still aiming for that. We're not going to drag this one way too much to the upside here. First on Nikkei here, we want to see how this level will perform, how this highest point of June will perform. If we get a nice break above it, of course that's great. This would confirm a forthcoming higher high, where the next potential target could be around the high of the 20th of February near the 23,806 zone, roughly around there, and slightly above that we do have the highest point of February. Let me just quickly put this one on the chart. So the highest point of February is not this one, but this one right here. So that's around the 23,995 zone, so not far from that psychological 24,000 mark. So again, from the long story short, basically, in order for us to aim for some higher levels, well, in the near term, I would say, or should I say medium term, we would need to see a break of this June high. But before that, that's what we're going to be aiming for initially. Like I said, we're not going to take this any further. For now, that's our target. In terms of the downside, we need to see at least a break of this downside line, and then maybe, in addition to that, a drop below this low here, the low of last week, near the 22,285 zone. A nice good drop below it could open the door to some lower areas, guys, so keep your eyes on that one. Now jumping into another Asian index here, and that's Hang Seng, the Hong Kong's Hang Seng. You can see that the index kind of retraced after hitting this level, the one what I was talking about. I've talked about Hang Seng about a couple of weeks ago, and basically what I was targeting was that there was this level here, the 26,805, marked by the highest point of March. We had managed to hit nicely that area, and then as you can see that the index drifted lower. However, what I was also saying that in a way, if it still remains above this barrier right here, the high of 10th of June, which is around the 25,304 zone, then there is still a chance for the bulls to step in and drive this one back up. So for now, that's exactly what we're going to be looking at. This is going to be the scenario that we're going to be I'm going to be keeping in mind. So basically, long story short, if we continue to see the price balancing above the 25,304 territory, somewhere around here, then yes, there is a good chance for this one to drift back up towards the that highest point of March near the 26,805 zone, and then of course we'll take it from there. In terms of the downside, if it drops below this 25,304 territory, then we will aim for a bit of a maybe a larger correction to the downside, because, and the reason why I'm saying correction, because don't forget we are still trading above this upside support line taken from the low the 19th of March. Now jumping into DAX, the German DAX, and here the index, it still ended today in the red. It opened with yesterday. It opened with a gap to the downside and moved lower. And in a way, yesterday I was talking about this idea for you to keep in mind, that in a way there is a possibility to see if, maybe a bit of more declines because of this little island reversal here, this little technical pattern. However, looking at the cash index right now, and we can see that the positivity that kind of came in at the end of the US session yesterday kind of is rolling into today's trading activity. We already saw that by looking at those Asian indices, and looking at the cash index right now on DAX. The price is currently balancing near the 12,840.50 mark, so roughly around those levels. So basically it's near this key resistance barrier here, the high, the current highest point of July, and this is where the index is currently sitting at on the cash index, and of course, if that gets broken, and if we see also a push above the highest point of June here near the 12,913 zone, then this is where more buyers could be joining in, because such a move would confirm a forthcoming higher high, and the next potential target here could be somewhere near the 13,500 level. So yep, that's why, guys, for now we'll keep an eye on that one. We are, like I said, very close here to this area right now on the cash index. So we'll have a nice opening gap here to the upside. First of all, that's something to kind of keep in mind. And yep, then of course, if we do get a push above these two barriers, this is where more bulls could join in. Jumping into another index, but this time is a dollar index, and this one is declining. Of course, the US dollar right now is seen as somewhat of a safe haven currency. So the market, because of the risk-on environment right now in the equity market, we're seeing here the dollar kind of sliding lower. However, of course, the fact that it's still trading below this downside line taken from the high of the 23rd of March kind of increases its chances of drifting further south. The only thing here that what I'm gonna do here is I'm gonna wait for a drop below the lowest point of June, near the 95.72 zone, because just to be on a safe side, guys, yes, we managed to drop below the 96.43 level. Yes, that's great. This is opening the door towards a possible test of the lowest point of June. But if that fails to provide support, now this is where more sellers could be joining in, because this would confirm a forthcoming lower low, and the next target for us could be the lowest point of March, or also the lowest point of this year, the current lowest point of this year, near the 94.65 zone, and then yep, we'll take it from there. Now, jumping into gold, here the commodity, I've talked about this one this week, and I was yesterday, for example, and I was telling you guys to keep a close eye on this upside support line, and the fact that we were trading just slightly kind of below at that time. We were trading slightly below this upside line. I was still telling you guys to keep in mind that if it drifts a little bit lower but struggles to close a daily candle below this upside line, then there's still a chance for the bulls to drift to push this one higher, further north, towards some other levels, which will mention in a few minutes. But the fact that, like I said, that it failed to kind of stay, yes, it broke this upside line, but what I was saying that we might get something similar as we had here, for example, on the 6th of July, where we had a strong false breakout, but then still the bulls managed to kind of lift the price back above this upside line. So for now, yes, we are leaning a little bit more to the upside, but we'll probably take a bit of a cautious approach and wait for a push above the high of last week near the 1818 level. A nice good pop above that area would confirm a forthcoming higher high, and the next level for us could be this one right here near the 1827 or the 1827 or the 1845 level here. But again, I don't have it marked, but let me just quickly kind of go back into history here a little bit, and yep, so now I need to kind of capture one of these levels here. Let me just quickly adjust all of this. So the 1827 is the high of the 19th of September 2011, and 1845 zone, roughly around there, is the high of the 14th of September 2011. So basically good potential targets here, good potential levels of resistance. However, like I said, let's wait and see. Let's wait for that confirmation break above the high of last week near the 1818 zone. So let me just get back into the chart here, guys. There we go. So yeah, wait for that confirmation break above the 1818 zone, and then yes, we could aim for some higher levels. Now, jumping into WTI oil, this one is still boring. Although we had a bit of a decline in the beginning of this week, but as I've mentioned before, keep your eyes on that 21-day EMA, which continues to provide decent support. And as you can see, this is what's happening here. So for example, it started off in around mid-June, and then the end of June, when this kind of 21-day EMA kind of acted as a fantastic area of support. Now it's doing the same thing. So all this kind of is increasing the chances for WTI oil to move higher. However, be very careful. We need a confirmation break first above the highest point of June near the 41.61 level, and then we could aim for some upside, some further upside. But again, for now, it's a little bit tricky here. So that's why wait for that confirmation break, because a nice good break above this level would also place the price above the 200-day EMA. Now, jumping into Ethereum. Ethereum is, well, first of all, let's get rid of all of these lines, because let's start have a fresh look. So first of all, Ethereum is kind of climbing higher slowly. Now we could try to draw an upside support line right here. It's a bit of a tentative one, but to be honest, all of them are going to be tentative, so that's why we can keep this one on the chart for now. This upside support line taken from the low on 13th of March, but at the same time, as you can see, the price is struggling to move above this the highest point of June, near the 253.50 level. So ideally we would prefer to wait for that push above that barrier and then kind of aim for some higher levels, because until then it's a little bit tricky here, guys, and of course it could move a little bit higher right now, but if it once again struggles to overcome this 253.50 level, then another round of selling could be possible, especially if the crypto breaks this upside support line, and then yes, we could consider some lower levels, especially if it also breaks below this low here, the low of the 10th of July, near the 235.30 zone, and yep, further declines could be possible. Now again, it's a little bit tricky here because it's not much excitement happening here. Yes, we did have a nice push higher in the beginning of July, but that's kind of it. It started the whole momentum started fading off, fading away, and now we're just basically still, yeah, we're trading above this upside support line, but we're struggling with this highest point of June near the 253.50 level. Now, a little bit of something more exciting, and this one is the US dollar against the Swedish krona. So yesterday in my traders tea time, I talked about this one, and I was telling everyone to keep an eye on this key important level of support near which is the lowest point of June, near the 9.1271 zone, because a drop below this would have confirmed a forthcoming lower low, and this is exactly what happened. So we had a nice drop below this. We also had a nice drop below the 9.1018 territory, which I talked about, and that's the lowest point of March 2019. So the pair kind of drifted further south, and the next potential target here could be near the 9.0108 level, marked by the low of the 31st of January. Here, let me just quickly zoom in here a little bit up. So that's the low of the 31st of January 2019. There we go. So that's going to be our next target. For now, everything's looking a little bit more bearish than bullish, because like I said, the pair drifted below this key area of support. It's still trading below this downside resistance line, so in a way, as long as this downside line stays intact, there is still a chance for this pair to move lower. So keep your eyes on that one. US dollar against this Japanese yen. So here the picture is still difficult, I would say. So today, of course, we are going to be keeping a close eye on this little short-term tentative downside resistance line that I talked about yesterday. This one's taken from the high of the 5th of June, and in a way, if it stays intact, then we could see another round of selling here, potentially kind of dropping towards this 105.94 level, which a break of which kind of would be seen as a more comfortable level after, like I said, after a break of which we could consider some further declines. So basically, if this little short-term tentative downside line continues to provide resistance, then a nice good drop lower could be possible. But if this gets broken by any chance, then of course we will aim for some higher levels in the near term. But of course, don't forget that we're still also trading below this other downside line taken from the high of the 4th of March, which could provide some resistance. So that's why for now it's a little bit difficult on USDJPY, but keep your eyes on some of these levels. First of all, of course, for the downside, keep your eyes on the 105.94, and for the upside, wait for a violation of this downside line first. Now, GBPUSD. Now, this pair today, of course, we do have some data coming out, or actually which already came out, and that was the UK's inflation figures. So the core and the headline figures came out better than expected, so that's kind of giving a little boost here for the pound against the US dollar. And but from the technical side here, you can see that basically this level here, the 1.2543 zone, acted as a fantastic area of support from where the pair right now is trying to make its way higher. However, as I've talked about this week, as I talked about this pair this week, in order to aim for some higher levels, we would prefer to wait for a push above the high of last week near the 1.2669 zone. A nice good pop above it could open the door towards the highest point of June near the 1.2813, and then of course we could take it from there. In terms of the downside, looking at this picture, we would prefer to wait for a violation of this short-term upside support line taken from the low of the 18th of May, and then yes, a drop below this level, below the low of the 29th of June here near the 1.2252 territory, could do the trick for more sellers, and we could see this one drifting further south. But oh, by the way, that's the lowest point of June as well, so good potential target here. I do understand that we could be missing out on a bit of room here, but to be honest, all this area would still be somewhat neutral for us, because in a way it could drift lower here. It might find maybe support somewhere here, rebound, and kind of move sideways here for a little bit. So that's why the ideal scenarios here for us are on a break of the 1.2669 zone to aim for some higher levels, and a drop below the 1.2252 territory could do the trick for more sellers. Now, euro against the Singapore dollar. Now, this is something that probably you don't look at very often, but sometimes it's good to have a look at some pairs like that. And here, basically, the pair is pushing nicely to the upside. Of course, the weakness of the Singapore dollar is right now kind of fueled by the fact that there is a surge in the coronavirus cases, especially in China. And China, as we know, it is one of the main kind of trade partners of Singapore, the kind of the problems in there are always reflected in the problems in China, especially with the coronavirus, are reflected here in the Singapore dollar. And the fact that the euro right now is popping higher, kind of giving this stronger, giving this pair a stronger move to the upside. However, as you can see from the technical side, for now the pair is finding resistance near the highest point of June, near around the 1.5869 zone, but if that gets broken, then of course the next potential target is the highest point of March, or the highest point of this year, near the 1.5970 territory. So basically, this previous surge here from the end of February and till the mid March, we had of course this was the sharp fall that we had in the equity markets, and of course the rising cases with rising coronavirus cases. So, and this is what the effect that we had here on with the Singapore dollar. A similar story is happening right now. You can see that the pair here is moving higher, or at least trying to make its way higher, but of course this kind of gives us an indication that maybe not all is well in terms of the coronavirus. Well, of course we can see that as well by the number of cases, but for now, basically how we're going to look at this pair is that if we get a nice pop above the highest point of June, then yes, that's I would say great news for the bulls of this pair, and the next potential target here could be near the highest point of March at around 1.5970 zone. So keep your eyes on that one. And finally, Euro USD. So this pair is working out perfectly according to the plan that I was talking about in the beginning of this week and last week. And yesterday we had a nice break and a daily candle staying above the 1.1353 territory. So that's was great news for the buyers. And you can see that one of the levels that I was talking about yesterday got reached. That's the highest point of June, and near the 1.1422. This is where today the holdup is kind of occurring. However, if that gets broken today as well, then the next potential target is near the highest point of March, which is also the highest point, the current highest point of this year, near the 1.1496 level. So let's keep an eye on that one. For now, everything's looking quite positive here, but the fact that we already had that nice surge here above this 1.1353, and we managed to reach the highest point of June, where currently a holdup is kind of happening. Now we will, like I said, we'll keep an eye on this highest point of June. We would prefer maybe to see a nice good break above it in order to get a little bit more comfortable with some higher levels. So yep, keep your eyes on this, guys, for now. Don't get me wrong, we may see maybe a small correction at some point here, but something still to keep an eye on for you. And let me just quickly draw this short-term upside support line, which I'll keep on the chart for now. And this one's taken from the low of the 14th of May. So as in a way, what we can say here is that as long as that pair stays above this upside line, then there's a good chance for euro dollar to kind of continue moving north. But again, like I said, let's wait for that confirmation break here above the 1.1422, and then we could aim for some higher levels. So guys, I really hope you found it useful, and thank you very much for watching and listening. Keep your eyes on today's calendar. It's quite seems to be quite a busy one. So we do have the Canadian CPI figures as well coming out later on today. So and of course we do have the crude oil inventories from the US. So something well, so by the way, we have the BOC and interest rate decision. No expectations, no changes there probably. So yep, but let's, of course, I'll pick up on the Canadian dollar in my trader's tea time. We'll see how, if we didn't have any nice kind of movement in the in the currency, and yep, we'll take it from there, guys. So thank you very much for watching and listening, and I'll have a wonderful trading day, guys. Thank you very much, and bye bye.